Okay guys, welcome back to module 7 of this pro course. So in this module today we are going to lay emphasis on your entries. So I want to make sure that before the end of this course you should be able to properly draw your key levels, you should be able to properly enter trades and be able to properly manage your trades and exit them. Okay, for the manage part, I think we're going to do a separate module for that one because it's a large topic. So we are going to cover your entries in this video. So you're going to brace yourself, and if you're doing something, I suggest you wait, finish up with what you're doing before you come and watch this, because this is one of the most important videos you're going to watch in this entire course. So let's get started. So first of all, your entry is simply the point is simply a point in the market where you're looking to enter. It's simply a price point that you feel like, okay, at this price point here, I want to take a trade to this direction or to this direction. Okay, so there are two outcomes in this market. The market either goes up or it goes down. So if you have a point of interest, if you have a key level, or where you can call it a key level, you can call it a point of interest, you can call it an ACP. Okay, so let's say you have an ACP, because that's how we call it here at Forex Hybrid. So let's say we have an ACP here, and just for a reminder, ACP here stands for area of condensed pricing, right? So let's say we have an area of condensed pricing. We've identified it in the market. So now we know that, okay, this is where we want to get involved. Okay, so now what are the conditions for us to get involved in this trade? I want that price should come back and retest this area and I sell, or price should break above this area, then I buy. Okay, so let's understand that notion before we get started. Right now we have a price chart here. For an example, I designed this myself. I'm sure it looks like a real chart. I designed this myself, so I want to explain to you guys how this thing works, right? So first of all, where is the market heading? Which market condition is this? And what's the current trend of this market? Where is it heading? I want you to have that information. So clearly you can all see that this market is heading downwards short term, right? So remember guys, we are doing all our analysis on the 4-hour time frame, please. Okay, so as a trader, as a Forex hybrid, as a hybrid, you get on your charts, you make sure you're on the 4-hour time frame first. Secondly, you make sure that you identify the trend. Where is the trend heading? Okay, if the trend heading down, when I say trend, I mean like it's not like the overall trend, right? Like the current trend, where the market is currently heading. Feel me? So if the market is heading down, you say, okay, now I'm in a downtrend. This is what a downtrend looks like. A downtrend is simply a market condition where we have the lows being broken and the highs remain the same. So we have lows here being taken out. This is a market condition where you have lower lows and lower highs, right? Then the second way the market flips, it changes character and breaks the high to the upside and forms a higher low, following with a higher high. Then we put ourselves back in a bullish momentum. So until then, we are still in a selling market. So this right here is an example of a selling market. So now, how do we enter our trade, and how do we know where to enter this trade? So first of all, to know where to enter the trade, you need to find where there is volume. You need to look for where there's an opposing power in this market. So looking at this market, where is an opposing power and where did it get introduced? So looking at this market, I will tell you that an opposing power got introduced in the market around this price area here. You see that the price was quietly trending downwards. So when it got to this point, let me box this area for you real quick. When it got to this area here, price faced difficulties continuing downwards, and it also faced difficulties continuing upwards. So what happened? Initially the market was trending down, right? It kept on forming bearish candles consecutively. Then suddenly a bullish candle appeared and tried to be different. This guy tried to be a hero. Okay, this guy here is a freedom fighter. So the guy now tried to change the trend. The guy was trying to make a difference. So instead, what happened? The guy pushed up all the way up here, but there's an opposing pressure, like I told you guys. An opposing pressure pushed and forced his candle to close back down here. So what happened? This guy was unable to make it up past this level. So he came back and closed here. So meaning there is something that is holding up price to go up there. So another candle came out again and formed. This candle, this time was a bearish candle, because when this candle closed here, it opened the next one here. This one also pushed up, tried to do the same thing, but failed. This guy also gave birth to her own kid. So their own kid now is like, okay, I'll continue where my mom left off. And they tried to push up as well, but no, they still failed. So what happened here exactly? So I can tell you from my own point of view, following my strategies and my way of trading, I know that there's an opposing selling pressure here. First of all, we're in a selling market. So now, it's going to make a lot of sense if price is going to attempt breaking this area and fails to do so, because while sellers are still insisting that price should go lower than what it is now, and buyers are like, no, we've gone low enough, it's time for us to buy this market, and sellers are like, nah, we ain't done yet. So when buyers keep trying to break, sellers push them, and that is why you see the candles closing out with a lot of wicks like this. This wicks here is to show you that there was an opposing guy here. If this guy was buying, therefore there were sellers in this wick long enough, and you can see that what sellers push the buyers down. Same thing here, same thing here, same thing here, and that is why the candles close out, leaving behind these long wicks like this. Okay, so with this information, how do you do it and how do you approach this market? How do you draw your key levels now? First off, let me show you how a bad trader will draw their key level. They will come on here and highlight the entire candle. This entire place will be their key level. And what end up happening is that they will have a trade like this, have a large stop loss looking like this, then their target all the way down. So when you have a position this big, the disadvantage of this is even when the price actually reacts to this zone, you are still going to be in a lot of trouble because you haven't hit any of your targets yet. Let's say price already bounced here and was making a push down up to like here and did not hit your target, and it went back up and stopped you out. You're going to be like, oh, this thing stopped me out, the market is against me. No, it's not, because you entered poorly. But if you enter correctly, when the market was coming down here, you should be exiting your first position already with profits, right? So that's why it's important to have a good key level. That way you're going to have a good entry as well, and a good exit, and a good target placement. So you need to have all of these things on point. So knowing exactly where to enter the market does not guarantee your success, but it's how you enter the market and how you exit this market, and how you actively manage your trades, manage your emotions, and put all of these things together. Your psychology needs to be intact. Okay, so we are going to do a separate course for psychology, a separate course for risk management, trade management, and all of these things. So don't jump and rush into that. We are coming to that. So first off, I want to embed the technicals into your mind. I want to make sure that you digest all the technicals, you digest all the skills needed for you to proceed to the next level of this course. So now I want to draw my key level. I want to come here and draw the candles, right? We are weak traders. As a forex hybrid, today I'm telling you that you do not trade candles, you trade wicks, right? You need to trade wicks. Why? Because that wick is opposing pressure. That wick is opposing pressure. I say 2 times. So we have wicks here, wicks here, wicks here, and wicks here. All of these wicks here are indicating there's an opposing pressure, there's an opposing energy, there's a friction where price is trying to push up, but the other one is pushing it down. And you can see that the guys that were pushing down end up winning, because why? Price did not make it out of this area, right? Good. So what you want to do is you want to take your box tool, like this tool here, or you can use your MetaTrader 5, whatever app you're using. I'm using TradingView. So you can use whatever tool you want. You can highlight the wick at the first attempt, right? So who is the first? Like you can look at this, you can see that this is a great grandfather here, this is a grandfather, this is his father, and this is the son. So you have to make sure that it starts with the person that attempted to break free, right? So let's assume that, okay, these were slaves here, and now this slave here suddenly like had a change of mind. I was like, okay, I'm done being a slave, and tried pushing up with a wick and failed. Then he gave birth to his son because he died trying. Then the son did the same thing, died trying, gave birth, continued with that direction until these guys here gave up and continued going down, right? So now these guys that attempted, we have to go with the first person that started. So who is the first candle here that started this movement? Is this candle right here, as you can see, because this candle has a big wick all the way to the opening of this candle here, which means this guy attempted to break past this level but failed, right? So we're going to start by putting our tool from the bottom, from the opening of this candle here, and draw it upwards like this, up, not down. We don't want this candle, we want just the wick, right? So we'll take the wick regardless of these other candles, because now we are working with the first guy. So we'll take it across like this, and we make sure we highlight all the wicks, right? We put all the wicks in a box looking good like that. So now when we have this, we know that, okay, we've properly drawn our key level. Instead of having a key level this big or this big, we have a key level this small, which is good, right? So I want to make sure that you understand this thing before we go on to real chart examples. Nice. So now this area here is called my ACP, which means area of condensed pricing. So price has condensed in this area. Price is being accumulated in this area, guys. So what you want to do is, when you are looking for a key level like this, right? When you're looking for an ACP area like this, you do not want to look for areas that have a lot of gaps in between them. You want to make sure that it's condensed. When the more condensed it is, the more powerful that level is. Okay, so there's an energy there waiting to explode. So you want to make sure that when it's exploding, you should be on that trade as well. So now this is my area here, looking pretty good. Now price is heading back up for what? It's coming here to retest this area. It's coming here to fill in these gaps here and these orders here. Okay, and once it is filled, this market will continue dropping. So now, after doing all these assessments, you know that okay, the market is bearish and I'm about to enter a sell trade. That makes a lot of sense because the market is bearish. I'm selling and I'm on the 4-hour time frame. When you have checked all of these boxes, then you are good to go. Now, before taking this trade, I want you to understand that there are two scenarios here. This market could still break past this level and stop you out on this trade. So when that happens, what do? We are coming to that. So first off, let's start by taking our trade. I'll use a sell limit, okay? So you do not use market execution. You do not manually buy and sell in these markets. Please, if you're learning from me, I do not do that and you do not do that as well. So what you do is you use sell limit or sell stop orders, whatever. So if you do not know what these are, go on YouTube real quick. It's a very short period. It's a very short topic. Type in there how to use sell limit or in trading, how to use sell limit, how to place sell limit in MetaTrader 5. Okay, when you go there, you search it. If you're using a phone, you should emphasize there and put phone. If you're using a computer, you should put the computer because the interfaces are quite different, right? So you should go and search there, depending on the device you're using, search it there, how to place sell limit or buy limits, you see. So you see a video there like 3 minutes long. Watch it real quick before coming back and let's continue. So if you've watched that, let's play this sell limit here real quick. So this is how you do it on TradingView. I just use this tool here and I'll put my sell limit somewhere in here. So I want to make sure that I'm a little bit deep inside the zone. I don't want to be entering down here or maybe waiting for a candle to close bearish before I enter. No. There's no such thing as confirmation in Forex, okay? I do not use those things because they are whack. Sometimes you see confirmations, but the price will still go against you. So enter the trade and go all in. Do whatever you want. Like it is what it is. The way it turns out is the way it's gonna turn out either way. So you're still gonna take a loss. If it's a bad trade, you will still lose money, confirmation or not. So I do not advise you go looking for confirmations. I advise that you wait when you see your setup and you're sure about it. You go ahead and place your sell limits regardless. So put your sell limit right here inside the zone, a little bit deep, not too deep in the midpoint because you might end up not get tagged. So you can bring your entry like close like this. Then you have a good entry right there. And you make sure your stop loss is above these wicks that you have here. Make sure your stop loss is above it. Let's say like so. Now that's a good stop loss right there. Then you make sure that pay attention to these numbers here. You want to make sure that you are risking 1 and you're making 2 times what you are risking, okay? So my risk to reward here is 2, right? So I have risk 1 and I'm making 2 times that thing that I risk, right? Good. Now this is my trade. All you have to do now as a hybrid is to wait. Guys, patience is virtue, right? You have to wait. You have to wait. Do not fumble. If you see the market reversing back from here, don't jump in and say, oh, I'm missing. No, you are selling here. This is your place. This is where you are. This is your chambers, right? This is your zone. Don't enter anywhere else unless you're in this zone. So price will patiently do whatever it's doing. If it's dropping or it's doing whatever it's doing, wait till it comes up and triggers your trade in like this. Then you have a big drop from there to the downside. Boom, straight to your target. Of course, it's not just going to bump like this. Sometimes it's going to consolidate and go back into drawdown. And I'll teach you guys how to manage trades like that in the following modules. So now we know that this is how we trade. This is a good sell trade right here. When you take a trade like this, you should be proud of yourself. Okay, so let's do another scenario. Now we've won this trade. Now let's take another scenario where the trade does not play out. Let's take another scenario where the trade ends up reversing on us. So now we just enter this trade. Now boom, there's nothing we can do unless close the trade with losses, and we don't want that. So now we are in this trade and the market keeps going against us until it stops us out, bam, like that, and takes our money, right? Now when this happens, if you look at this closely, you will notice that what price has broken above this area that it was struggling to do so in a very long period of time. So when this happens, you say, oh, nice, price just did what it's been trying to do it for generations, but now this guy just successfully did it. So that is a big thing. That's a big deal, right? Now what you want to do is you want to make sure that 2 generations past this should close out as well to confirm that this is valid, right? You should make sure that what this guy should give birth to a son and let the son take over, maybe close out like this or even like this, right? If we can have a candle close out, 2 of it, so this candle close outside, this one open and close outside, not inside here, we have confirmed that this is a confirmed breakout. Now we know that what price has successfully broken above, and now it's time for us to enter and buy this market. We just lost money here, remember? So now we are going to come back here, place a buy limit just a little bit deep into our zone, just a little bit deep into our zone. Same thing we're doing here when we're selling. We just enter a little bit deep in our zone like that. We make sure that our stop loss is at the recent low, and here we don't really have any recent low, so I'll keep it here, estimating the space from this key level down to this gap. I'm looking at this gap here, so it's not too big, and I don't want price to come back all the way down here, so that's why I'm putting my stops here, right? So this is a perfect stop loss for me, and my target will be 1:2 as usual. So if price comes now and triggers my trade in like this, bam, I'm hoping that price comes out from here, guys. 75% of the times, right, you're going to get this right. 75% of the times. So if you lose money selling, you will make it back buying if you stick to this rule. Take this screenshot this right now on your phone. Know how to use this. This is a very, very important tool. Okay, this is a tool. This is not just any kind of, this is a tool I'm giving you guys, right? Knowledge is a tool, it's a weapon. Use this. So when you're losing, you're still winning. You're winning, you're winning. Either way, you win. As long as you're in this mentorship, you win. Now, we've said a lot. I want to show you guys some examples so you guys should, see how it looks like on a live market. Good. So this is my chart right here. This is Euro Canadian dollar. So this is the euro against the Canadian dollar on the 4-hour time frame, right? As usual. You remember on the other episodes, I told you guys, analysis are done on the 4-hour time frame because this is the best time frame that you want to work with. Now, looking at this trend, let me zoom out back so you guys can look at the trend real quick. Looking at this trend here, following this lows, this swing point, lows and highs, you can see that we have lows here. We have a higher high, a low, higher low, higher high. You can see that all of this high, this low here is higher than this one, right? This low is higher than this one, telling you that what this market is in an uptrend. If I use a trend line here, you see that this market is trending upwards. Beautiful. Now we know that the market is trending upwards. So how do we treat this information? Now, we do not really care where the market is going, but now that we know that the market is heading upwards, buying will be a better scenario for you, right? Good. Now let me show you guys something real quick. You can see here that we had a good ACP area here. We had a good area here where price held up and tried to break above these areas because price was heading upwards to begin with, right? When an uptrend, don't forget. So price now was struggling to continue its thing, breaking highs to the upside. This is a high that was supposed to be broken by price. The price failed to break this high. Instead, price came here and attempted to do so, dropped, came again, dropped. For generations, they've been struggling to do it and they've not succeeded. So when this guy finally broke it, I knew that, okay, this is it. Price broke above here. I placed my buy limit here. As you can see, this green stuff here is my trade. I bought this market here and I took some money from the market here before the market reversed on me. So before the market was reversing, I already took my money and I broke even with the remaining position. So I did not take any loss here. So that is how I managed this trade. Now I came here to actually show you guys this key level. Look at this ACP area here. You can see the same explanation goes here, right? The wicks. We have wicks aligned in a horizontal way that the other ones are not breaking through or too longer than the other ones. We have wicks in an area that we can box it all together. Then you can see that price has accumulated. You can see that price has congested here. There's a lot of saturation here. You feel me? Up, down, up, down, up, down. There's no movement. It's too choked up. It's messy. This is what you want to trade. So once you see this, you know that, okay, I know where the money is in the market. this is where the money is. The money is where there's saturation, right? So now I look for the wicks that are properly aligned. Boom, I draw them out. Sound like that. Beautiful. Once I draw them out, I make sure that what I have my sell limit sitting there. So I chose to put my sell limit this time in the middle, not at the beginning or the opening here, or maybe a little bit deeper. I did that because I noticed that the wicks here are too long, that if you want to take just the, you're still going to have a big area for stop loss, and I don't want a big, a red area. I like small red areas. When I see the small red areas, I stay motivated. So one thing as a trader, or one tip that I'll give you guys is, you want to reduce anything that you feel like intimidating you in this market. All right, if anything at all is intimidating you in this market, take it off. So when I open my chart, normally it comes with grids, right? This thing comes with some grids, some lines on the screen here. So I get rid of those lines in the settings. I make sure that I use the colors that are appropriate to me. I don't like red and green. This red and green, it's giving me some kind of a scary vibe. You feel me? I don't like red. I don't like to see red too much. So I change the colors to colors that are more pleasing to me. So when I look at it, my brain tells me, oh, there's no danger. So these are things that reduce anxiety in this market, right? So I want to be in an environment where I'm comfortable, or where I feel like I'm superior. You feel me? So now I see my key levels, I draw them out, and I make sure that what my risk is I'm satisfied with what I'm putting on this market. And I don't like to see something like this. I like to see something like this. You feel me? So I have that set. Beautiful. I want price. Since price broke up and gave me my trade, but it didn't continue pushing. Instead, it ended up breaking back down. I've seen two candles close out, and now I want price to retrace inside here, trigger my trade, then drop. So I take money from this market. So that is how I'm going to trade this. I'm going to sell this market because the price has failed to break these highs. Instead, it has come here, consolidated, then broken lows to the downside. You can see this low here taken out, meaning market is shifting structure short term to the downside. So price could potentially reverse all the way down here before even continuing back up. So I'm going to capitalize on that, and I'll sell this market. Let me show you guys another example. Okay, this is another example here, and this pair is New Zealand dollar against the US dollar on the same time frame, 4-hour time frame, right? Beautiful. Now this is it here, same explanation, same thing, right? The only difference here is we are going with the trend, right? You can see here that the market is trending downwards using this trend line. Look at this trend line here. You see that the market is going down. So how did I draw this trend line? I take the highs and I link them together, right? You take the high, you make sure that this high is linked with this one, and when you have two highs, you already have a trend line. So two highs are connected, then boom, the third one came here, connected itself. Then we are waiting that price should connect the fourth line, and we continue down. But I don't really care about the trend line. The trend line, I don't trade trend line. Trend line is not my strategy. I use trend line just for directional bias, right? So now I know that the market is going down. Beautiful. Now where is my area of condensed pricing? Price was condensed here. Let me show you guys the spot where price was condensed in this market. You can see that price was condensed here, price was condensed here, and price was condensed here. Price condensed here, and condensed here. But now the difference is that if you look at this one, I cannot spot any horizontal level balanced delivery of momentum. You feel me? So momentum here is kind of slanty. If I link these 2 weeks together here, you see that they are slanty towards the upside. Same thing for their highs here. If I link them together, you see that they are slanty. Some is long, the other one is short. So you don't want to be in a market condition like this where it's confusing. Same thing here. It's not clear. I don't have it. I like to see price balancing on one area, on one surface for a long time. And that's exactly what price did here. Price was balanced here. So when you see more than 4 weeks choking in this area and struggling to break through and failing, then you see price saturated like this, you know that okay, you have a good selling opportunity in a downtrend like this one. So I took a sell here on this move here. I sold this market and I made some money. If you go to the public group, public telegram, scroll all the way up and look for New Zealand dollar USD, you'll see this particular trade. I took it and I made a lot of money here with the rest of the team. So now that you are here, you're going to be trading alongside with us. So now I'm looking to still sell this area because why? It has not been broken to the upside yet. So this area is still very valid and I still see wicks that I'm comfortable with, right? So now what do? I set my sell limit a little bit deeper in my zone, and my stop loss above these wicks like this, and I just give it some room here for price to breathe, right? Now if price triggers me in, I'm definitely selling. And if price, because I'm ready for both scenarios, that's why I'm comfortable when I take my trades, because I know what will happen if either of the scenarios pop up, right? So if price stops me out instead, I'll buy and make my money. So still, I'll sell and I'll lose money, but when I'll buy, I'll make my money back. But if I sell and it works out, okay, I'm good. I'll continue with my day. Beautiful. Let me show you guys one last example before we end this video. So if you look at this here, this is gold against the US dollar on the 4-hour time frame. Now, I have this area here, this nice area that I saw price balancing on this nice horizontal level that I could box. And I'm confident with this. Look at this. We have more than 4 weeks piercing this area and failing to break down. Now, if you look at this market trend here, you see that this market is clearly trending downwards. This market has been selling for a very, very long time now. So this market has momentum to the downside than it has to the upside. So what do I do with this information? Now I know that I want to be selling instead, not buying. But as you guys can see here, I'm buying. Now, if you ask me why did I buy, I told you guys that in a market structure where we have lower lows and lower highs, that's a bearish market. But the second where the lower low, this low here, produces a high that breaks this high, instead of breaking a low, it breaks a high to the upside. That means the market structure has shifted. It has shifted from bearish to bullish, right? So now I want to be looking for buying trades in a bullish market, not selling trades. So here you can see that this is the recent high that was formed before this big push. Then price has deliberately broken this high back to the upside, meaning we might have a higher low and a higher high. So that is why I wonder if price should retrace back inside this key level, then I'll look for a buy trade to the upside. And that is exactly how this trade should turn out. So thank you guys for watching this amazing module all the way to the end. I feel like this module 7 should be one of my favorites because it has more of technicals and practicals in it. So I want you guys to know that trading is not going to happen in a day. Okay, so if you have been watching my courses from day one, if this is day one of you watching my courses and you're already at module 7, I think you should take a break, go to your chart and practice. When you keep watching and stacking knowledge in your head, you end up not knowing anything. Okay, so learning without playing make Jack a dull boy. You need to get out there, go to your screen, try to look for these patterns, look for these particular ACP areas, highlight them, and see what happened when you highlighted them. See what happened. Did it reject price? Did it break and retest? Just pay attention to these things. They're very important. So after you've practiced enough, you come back and continue watching. Watch and practice, watch and practice. That's how you learn. You don't just watch, I'll post like a bunch of videos here. If you watch all of them in a day, then you end up not doing anything. Okay? So watch one video, go home. If I've said anything there, go and look for that topic. Dig more, do your research, you understand? Practice, and practice. If you face difficulties, come back to the private group and tell me. We go on a Zoom meeting, I call you and I straighten it out. That's why you're here. We work as a team to get you profitable. So thank you for watching. My name is Ghislaine, your favorite mentor.